Okay guys, today we have to discuss another standard, and that is IAS 40 investment property. Okay, so IAS 40 is about property like land and building. Okay, and that is owned or leased is a right of use asset for rental purpose or for capital appreciation, or maybe both. So we call that type of property as investment property when the property is owned or leased as a right of use for rent purpose or for capital appreciation, or both. Now let's talk about the example that we will consider that the property is examples that the property is investment property. For example, we have a land for capital appreciation. When you hold a building, let's say you hold a building or land and you are just waiting for capital appreciation, then that sort of property will be considered investment property. Undecided use. So when the property about which you have not decided that for what purpose you will use it, then that will also be considered as investment property. And then lease building, and that should be operating lease. So that sort of operating lease, that sort of property will be considered investment property. Clear? Now, what are the property which you will not consider as investment property? So the property which are not considered will be investment property. That's, let's say, like not investment property. Okay, the property which are used for production or for admin purpose, that will be dealt under IAS 16. And the property for sale, or you may say like under construction property for sale, the property you're constructing and you are thinking that you will sell after construction. Okay, the fourth one I will say here, owner occupied property will not be considered investment property. The property which are leased, but this lease is finance term, so you should not consider all these type of property as investment property. Clear? Let's move on, and we have to talk about recognition, which is very, very important. Come here. So let's talk about recognition, that how you will recognize. So investment property initially recognized at cost, and then subsequently you will either use cost model or fair value model. Clear? So these are the measurement option you have. These are the measurement option. Clear? Now, if you are using cost model, let's say you are using cost model, then the property will be held at cost less accumulative depreciation and impairment, and here no revaluation. Clear? And if you are using fair value model, then the property will be remeasured to fair value, and here you will have no depreciation. Okay? Now let's talk about consistency, about the models. Okay, so here I will say consistency. So it means that whatever model you are choosing, that model should be applied consistently to all investment properties. Clear? Whether you are choosing cost model or fair value model, then you should use that model consistently. Clear? Then you have some exception cases. Exceptional case. Let's say if fair value cannot be reliably measured, then adopt the cost model. Clear? And about reporting, so the gain or losses from revaluation reported and the profit or loss statement. Clear? Okay, now we have done with the recognition and also about exception cases and reporting. Now let's talk about transfer, how you will treat the transfer. Okay, let's talk about transfer. So transfer only allowed with a change of use. When there is a change of use, then you can transfer the property. Let's say you have if we say like investment property transfer to owner occupied property, then how you will deal it? Let's say we have investment property and we are wanting to transfer to owner occupied property. So what you will do is be simple. Use fair value at the change date, find an account under IAS 16, which is dealing with the property plant equipment, per subsequent accounting. Clear? Now let's say if we are transferring the investment property to inventory. So again, use fair value at the change date, and then apply the IAS account as for the IAS2 inventory for subsequent accounting. Clear? Now if the transfer is reversed, then how you will take that sort of transfer for accounting purpose. Let's say now we have transfer. Let's say we have here the transfer is owner occupied property to investment property. Then what you will do, you will apply, because it's owner occupied, so I-16 you will deal this with the under I-16. So apply normal IAS 16, okay, up to the change date. Clear? And then if there is increase in fair value, then that should be recognized in OCI as OCI and credit revaluation surplus. What if there is a decrease in fair value? Then that should be charged to profit. Clear? Now how you will deal if you have a transfer from inventories to investment property. So any change in carrying value due to transfer will be recognized in profit or loss statement. Okay, fine. Now let's discuss about the disclosure. What are the disclosure you need? So here let me write disclosure. And the disclosure, what you will disclose. The first thing you will disclose is the model. What does it mean? It means that what type of model you are using. Let's say you have to disclose whether you are using cost or fair value model. The second thing which need to be disclosed is the profit or loss. It means that you should disclose amounts recognized and profit or loss statement during the period. And the third thing is reconciliation. So you should reconcile. You have to provide, reconciliation between the carrying value of investment property at the start and the end of the period. You should provide reconciliation of this. And the last one, I would say, like if you are using cost model, then the cost using the cost model, then disclose fair value of investment property. So these are all about the disclosure.